Powell says that smaller interest rate hikes, could start in December. China signals slight COVID policy easing, but don't expect sweeping changes yet. Stock market leaps after Powell signals the rate hike slowdown. Sam Bankman-Fried says he didn't ever try to commit fraud.
Cap.
And supposedly, he's broke down to just one credit card. The former FTX CEO Sam Bankman-Fried claims he committed no fraud at all.
Now with the album out, are you paying attention to what people...
Wow! Elon Musk meets with Apple CEO Tim Cook and says Twitter is not at all at risk of getting pulled from the Apple Store. Wow, they're best friends now. Just a week ago, they were going at it, and now they're just best friends. Wow. So I guess I just shorted the bottom. I guess I shorted at the exact wrong time because the market's going into a full-on bull run. A full-on, all-out bull run. Let's buy the dip as aggressively as we possibly can, sell everything in our possession, including family members, to buy the dip, leverage up, and go all out because we are going to the promised land. Look, obviously this is a joke. I'm joking, okay? The market looks bullish short term, but just to be clear with everybody watching this video, it is very, very, very bearish. It's never been so bearish. I want to talk about the truth on how to make money and become financially independent, because that's what we talk about in this channel. I'm gonna give you the scoop, straightforward, the truth. I'm gonna give it at you. My goal here is to make as much money as possible. So if that involves me getting out of my short positions, longing the market, making money off of that, and then shorting it again, in an even more epic short, I will do that. And while I'm doing that, I am going to bring you along in this journey and show you exactly how to do that. And that, I mean, cash flow in the bear market, making money while everybody's panicking and dollar cost averaging their way to not success. What's the opposite of success? The opposite of success is like dollar cost averaging to destruction. That's what a lot of people are doing right now. I want to show you how to truly make money. Now is not the time to dollar cost average. It never was. I do think the long term, all jokes aside, is very, very, very bearish. And I had to say it 3 times to let you know that is very scary for me to get out of these short positions and long the market. The risk is high, but I do think with what's currently going on, the market could move up. It could move up as 27 to 40% for Bitcoin's price. Now, that might seem like a lot depending on your perspective, but it's not that big of a deal considering what it's done before. So I do think that a 20 to 40% pump is likely. So I will take advantage and make money off of it. And then I will call the short from an even higher position and make way more money. Honestly, I'm thankful for this pump because the volatility allows us to make money off of the swing of the market. And I'm also thankful for the fact that I'm just so clearly bearish. Like I know the market's going down. So this is just giving me more room for my short. And honestly, the only thing that's been bothering me lately is the fact that I did not get enough short positions. So I'm going to find more money and short the heck out of the market one of these days, but it's not happening right now. In the small or short term, which I mean anywhere from 30 to 60 days, we could see a pump of the market. We could see Bitcoin coming up 20 to 40%. And my goal is to get out of my current profitable trades, which by the way, my shorts are in massive profit, which I'm going to show you in this video. I'm going to get out of my current profitable trades, long the market, and make money off of that. And if you don't long or short, I will in the future, in the next 30 to 60 days, give you a call and say, hey, it's time to get out of the market. And obviously none of this is financial advice, but how accurate have I been in the past 6-7 months? You guys need to go back to my old videos and look at it. I'm not trying to glorify myself. I'm just letting you know that the answer is not dollar cost average. It's swings and position trading and dollar cost averaging. Yes, you have to learn everything. You can't just be a mindless person that sticks to one thing and never adapts. It's, again, swing trades, position trades, and dollar cost averaging. Swing trades last months, position trades last years, and dollar cost averaging a little bit longer, probably like 2 to 3 years, depending on what you think dollar cost averaging is. And I will say that there's even people that do it on the daily, like my coach Nick in Fundamental Secrets, building cash flow daily. So it depends on your preference, but from what I use all three to my advantage to make money in any market condition. And I will continue to preach that on the internet to help people achieve financial independence. So the main topic of this video is to show people how to make money now and then give you a future projection of what I think is going to happen and the timing behind everything. Because for some reason, pretty much everybody right now is extremely bullish, extremely bullish. It's crazy how bullish they are. So yeah, let's jump into the video so I can show you how crazy that is. The first thing I want to point out here specifically is the speech yesterday by Jerome Powell. So I want to go to the last part because the last part here is the reason why everybody's freaking out. So if we read this together, monetary policy affects the economy and inflation with uncertain lags, and the full effects of our rapid tightening so far are yet to be felt. So he's clearly explaining that inflation is not slowing down. So the gist of this, and I'm going to back it up with more evidence, is that there's so much damage currently still happening to the labor market, to inflation, to the housing market, inflation in general on different metrics. They're all out of whack. But in the short term, he doesn't want to destroy the economy. That's basically what's happening right now. So thus, it makes sense to moderate the pace of our rate increases as we approach the level of restraint that will be sufficient to bring inflation down. So he's just being patient. He's like, look, I'm not going to tighten super hard. I'm not going to, raise rates to like 1,000,000%. I'm not going to go crazy. I'm going to slow it down slightly in December. Okay, that's what he specifically says, and we'll read more. I'm going to slow it down slightly in December and take my foot off the gas a little bit to let the economy breathe, because this is a long fight. This is a long fight to bring down inflation to 2%. So that's all he's doing. So again, I say this is a short-term pump. A short-term pump that I'm taking advantage of. And when I mean short-term, I'm thinking the next month to 2 months, okay? And I might even go that high, and I'll lay out the different risk parameters in this video. So let's continue to read. The time for moderating the pace of rate increases may come as soon as the December meeting. Given our progress in tightening policy, the timing of that moderation is far less significant than the questions of how much further we will need to raise rates to control inflation and the length of time it will be necessary to hold policy at a restrictive level. He's clearly explaining right there that the timing of this is less important than how much they need to tighten the economy or tighten monetary and fiscal policy. It is likely that restoring price stability will require holding policy at a restrictive level for some time. History cautions strongly against prematurely loosening policy. We will stay the course until the job is done. So again, they're not loosening it. They're simply slowing it down. They're trying not to destroy the economy all at once. They're just doing this soft ease on rate hikes. This is very important to understand, because I know people on the internet are going to take this bull run to an exaggerated level. It is not the bull run. They're just simply loosening up a little bit, which could give us room to the upside for Bitcoin's price and some cryptocurrencies. So I'm just taking advantage of a swing trade. I hope I made this very clear. Now I'm going to make it even more clear. The best way I could put it is that I'm going to try to show you the bullish case, but I'm going to say it in an extremely bearish way. So we are in a short-term bullish thing, but it's extremely bearish. It's extremely bearish. Let me say it again. It's extremely bearish. Now, the reason why I'm even saying this in the first place is because I know people are in short positions like me, and I will likely sell out of my short position. I haven't done it yet, but I will in the future, probably after this video. If you want the full scoop on exactly what I'm doing, second by second, minute by minute, the fundamental secrets is in the pinned comment below. It's currently on a discount for holiday season. Take advantage. That's where you get it exactly when I do it. I have already updated my group literally a couple of hours ago. I told them pretty much everything I'm telling you in a simple way. Now, the YouTube videos is obviously to explain it to my entire audience, but if you want the minute by minute, second by second update, Nick called it before me. So my short-term trader, Nick, he called it before me, I think yesterday. So catch my drift here. I think you get it. So if we come to Bitcoin's price, let's explain the long-term perspective for the people that didn't watch my last videos. I do want to hammer on this. And this is going to give us the bearish case for the long term, because I do think it's going to happen. And it's primarily couple reasons. Number one is regulation. This is a problem that's bringing the market down consistently. Number two is the energy crisis. The energy crisis is bringing the market down in a crazy way. Number three is obviously macroeconomic conditions, which can be summed up as inflation. Now, we just read the report and I'll dive into it a little bit more detailed. But basically, the gist is inflation is still here. It's still rampant. It's still an issue. But again, they're softening the blow by not increasing the rate hikes as aggressively. So if we come over here, the first thing I want to show you is an executive order on improving the nation's cybersecurity. This is regulation. This brought the market down substantially. This was the first top. The second top was, again, another regulation type event where 56 million was seized and sold to compensate BitConnect fraud scheme. These two are very close to the top. And another one is President Biden announcing a release of the Strategic Petroleum Reserve as a part of ongoing effects to lower prices and address the lack of supply across the world. So this is energy crisis related. Now, these three right here are regulation related, and you can see it drop the price. I'm not going to go into it. I have other videos for that. This is also regulation related. This dropped the price as well. So regulation is the big one. And guess what? Midterm elections is over and it's slightly Republican, and the Republicans are looking for regulation. They're looking for regulation because why? A lot of corporatocracies back Republicans because of the obvious reasons. Republicans like less taxes and they like less regulation. So they are looking to input regulation, central bank digital currency. All of these things are still going to happen. They're still going to happen. They have not left the building. All of these things. So again, energy crisis, macroeconomic conditions, regulation, all of these things are catalysts for the downturn of the market, and they're still happening. They have not left the building, and that's why I put these funny intros to show you how ridiculous people think on a short-term time horizon. They haven't left. Nothing changed except for the fact that Jerome Powell made one statement, bro. Just one statement, and next thing you know, we're in a full-on bull run. All he said, the timing for moderating the price of rate increases may come as soon as December meeting. That's all he said. And supposedly we're in a full-on bull market. This is it's crazy, but hey, people get duped. I'm going to make money off of people biting into false narratives. I'm going to make money off of that. Now, very quickly, I want to show you this chart here for Bitcoin's price because it does give some context. So as you can see, we've had some major drops. Like this one was pretty bad. It went down 48%. We have major drops here. We have major drops here. Look, this one's down 42%. We have another major drop here, right? This one's down another 43%. This was a major drop that we recently experienced that I made a lot of money off my shorts right here. We're down 26%. So through all of these drops, we also had the price of Bitcoin bounce back, right? So right here, it bounced back 46%. Right here, it bounced back 21%. Right here, 43, 22, right? 18, right? So the point is that although I think it's bearish, I think it's going to take some time for us to get a massive leg down again. I called it on midterm elections. I told you guys the market was going to drop on midterm elections. It did. Now, what I'm saying is that it's going to take us some sideways action and maybe even a bounce back similar to what you see there. And then we're going to get the massive drop that will take us below 16K all the way to 10, 13K, whatever you want to call it. It will take us that low. But right now, we're going to have a little bit of sideways consolidation and maybe a price increase. Now, if you put a gun to my head and we're like, Alex, where do you think the price is going to go before it drops? I would probably say the most realistic answer, in my personal opinion, is it's going to fight at 20K and then drop in January and February. Why? Because of one huge catalyst. This is big. This is, for me, the biggest, one of the biggest, top three at least. We talked about the other ones, right? But one of them for me is Apple Q4 earnings, not Q1. So Apple, I said it in my last video, I apologize for that. Apple's Q4 earnings will be dropped in January or February. So the Q4 earnings will be showing what happened during Christmas. Apple has not been able to meet demand, and you can't get an iPhone 14 or an iPhone 14 Pro right now for Christmas. You have to order it for after Christmas because they just literally cannot meet demand. In China, there's the zero COVID policy and people are rioting the streets. All of these things are still happening and Apple's not going to meet demand. So it looks like they're going to have a very bad Q4. Now that information is released in January, February. I have to double check, but it's in January, February. I believe it's in January. So when that comes out, it could signal the top. And guess what? We're not in January. We got 30 days. So again, we could be moving up for 30 days. Then a drop in January, February is what I'm looking at. This is why I told you 30 to 60 day swing trade. That's what I want to do. Okay. So that's currently happening right now. Okay. Now, how high can we move up? That's the big question. Well, if we look at this right here, we can move up 46%, right? The biggest bounce we had was 46%. Okay. That's the highest, but the lowest bounce we had was 18%. So if we just draw that out real quick from the bottom, bounce up 18%, that will bring us to about 18K. I think we'll go higher than that. If you ask me, realistically, we're going to come up to this 20K and reject off. That's my personal opinion. It'll probably take us 30 days to get to 20K and then we reject off. Now, if it does go past 20K and makes its way up, then we have a fair value gap right here at 26K. Basically, a fair value gap is just a price structure with insecurity. So this is a liquidity level that the whales and market makers want to bring it back to. So the only place I would think is here. Worst case scenario. If you ask me, I think it's coming to like 25K. Worst case. And I don't want to say worst, but best case, I guess, because it's bull run. But you get the point. I think if someone put a gun to my head, I think my first decision would be, it's hard to say, but my first decision would be, okay, it's going to 20K and rejecting. My second decision, which they're very close, I don't know which one it would be, will be right here, 25K, 24K, right around this liquidity level. Nick, my coach, I don't know how much he believes in this, but he slightly mentioned that maybe even 36K. But it's bearish, okay? Maybe even 36K. It's still bearish. And the reason why I don't think 36K is because this right here, this price structure invalidated this fair value gap. So I don't know if they're going to come back up to this liquidity level. I don't think so. But I will say that, 26K is not off the table at all. And I just think that it's more likely that we reject off 20K. I think we're going to, this was previously a massive support. We're just going to reject, make it resistance and come back down. That's my personal opinion in the next 30 days. And that's the timing behind it. So if I get a leverage long on an altcoin, I can make some money. So I'm going to get out of my short positions, long it, make some money, and then short it right here. I'll probably put some short positions here. Right here, I'm gonna put some short positions, right? So you're making money in both ways, and that's how you, again, become financially independent. Now, there's something else I wanna talk about, which is the VIX. This is the volatility of the S&P 500. Now, for new people that don't understand this, I just wanna briefly explain. The stock market, okay, is very much correlated to Bitcoin's price, and then Bitcoin's price is very much correlated to all altcoins. What does that mean? So if the stock market pumps 10%, Bitcoin pumps 20%. I'm just guessing on the numbers, but you get the point. If the stock market pumps 10%, Bitcoin pumps 20%, and then altcoins pump 30% because they're higher risk, lower liquidity. That's how it works. So if you look at the S&P 500, it's a very, very good indicator for Bitcoin and all cryptocurrencies. So if we look at the volatility of the S&P 500, it gives us a different perspective. Here's one reason why I don't think we're going to go into cascading liquidations and go all the way down to, 10K BTC, at least not right now. And the biggest reason is because there's no volatility in the market. Every time we've seen the market come down substantially, like COVID, as you can see here on the left, this is the volatility. On the right, this is the S&P 500. So if we look at the left, look at this volatility. It got all the way up to 60. Oh, I'm sorry, even higher than that. This is a candlestick here. It got up to 84 volatility during COVID. Okay. If we go throughout history, the volatility typically spikes over here. Let me kind of just zoom out here on this major dump. Let me zoom out even more. This major dump right here, the volatility got up to 48. This dump right here, volatility got up to 95, right? So this dump right here, volatility got up to 50. This one got up to 83. So typically the volatility spikes when we have a massive dump. I think they're going to move the market up. The market makers, the people that are in, that have the biggest liquidity, the insiders, I think they're going to move the market up because everybody knows it's bearish right now. Everybody knows it's too bearish. Everyone's shorting the market. They're shorting way too late. And now they're like, okay, let's get them out of their positions, move the market up. And then there's going to be an event. I don't know what the event is. It could be Apple's earnings call. It could be a Black Swan event. I don't know. In January, February, I think there's going to be an event that brings the market down, that will bring this massive volatility. It's not going to be like a slow ease down. Look at the S&P 500. It's like slowly going down, right? Look at this. That's not slow. These are very aggressive falls. Very aggressive falls, like very aggressive. Look at COVID. COVID, very aggressive. This is like slowly going down. So they're running the market back up. They're going to run the market back up. They're going to try to catch people off guard. That's how they do it. That's how you make money if you're the market maker. So if you look at volatility, the volatility is way too low right now. Look at it. We're currently at 20. The volatility is way too low for us to fall, in my personal opinion. I need to see that volatility spike a lot. And then, that's kind of like a confirmation that we're going to go down a lot. Okay. So the volatility is it's dropping. The volatility is dropping right now. So it's not going up, it's dropping. So that's very important to point out. Another thing I wanted to quickly address is this. USDC and USDT are fine. Now, I know there's a lot of FUD out there. USDT did a lot of sketchy things. I'm not trying to go into their history. That's not my goal here. But I will say that USDT has a bigger market cap than USDC. Look, USDC is at 43 billion and USDT is at 66 billion. So I know there's a lot of people trying to take out USDT, and maybe in the future it dies. But for right now, I don't think it's that big of a deal. And I think a lot of it is FUD. Again, I don't support USDT, but what I will say is that you can't short the market without USDT on the platforms that I use. So a lot of people have been asking me in my group, and there's been a lot of FUD. I'm cool with holding USDT, at least right now. In the future, that might change. But yeah, just don't get caught in the FUD. Now, going back to the intro, look at these headlines, man. They're market making it. China's slowing down its COVID policy. Like, come on, right? Stocks leap. Sam Bankman-Fried. This was an interesting one because I watched the entire interview. Supposedly before he was like the worst person ever, Bernie Madoff, Ponzi scheme scammer that stole everybody's money. Now, I'm not going to lie, the news outlets are making him look not as bad. Now, again, I don't agree with anything he did. I'm not saying he's a good person in any way, shape, or form, or a bad person. I'm just saying that the narrative switched to him 10 out of 10 horrible person to now a 6 out of 10, 7 out of 10 horrible person. So it's really important I address that because it looks like all of these very harsh, hardcore narratives are now being softened. For example, Elon Musk was out there tweeting, Twitter sucks, basically, attacking Twitter. Now he's their best friend. Again, softening, right? So I see the narratives. Again, Federal Reserve, they're saying that they're going to take the foot off the gas and like slow it down a little bit. They're softening it because they want the narrative to come back. Market makers bought it up yesterday, right before the Fed meeting. They knew what they were going to do. All the guys with the insider information, they bought it up. Fed meeting softened it. All this other news comes out at the exact same time, everyone's softening the narrative to sucker people back in and then sucker them out again. That's the whole point. That's how it works. So I'm going to take advantage because I know when to call the top. I know when they're going to start flipping the script. I'm not going to get greedy. I'm just getting a swing trade, getting out of my short positions. And then there will be a time, and I'm letting you guys know ahead of time, January, February. I'm letting you know ahead of time, January or February, there will be a time where the market dumps, okay? Maybe my timing's off a little bit, but I know we're in a full-on bear market. Long-term time horizon, the market will come down. The market will come down. I'm very confident of that. Obviously, none of this is financial advice, but hey, I'm betting and I'm showing you right in front of your face as we do it. Now, let me just take a quick second. I want to show you a little bit more about the meeting and explain some more details, and then we're going to jump into my actual trades. From my perspective, this part of the Federal Reserve meeting was pretty important to understand the longer term time horizon. For starters, we need to raise interest rates to a level that is sufficiently restrictive to return inflation to 2%. This is exactly what they need to do. They need to bring inflation back to 2%. That's how the Federal Reserve moves. So being that we're still at like 8%, they're going to still tighten monetary policy. They're just doing it less aggressive in December. There is considerable uncertainty about what rate will be sufficient, although there is no doubt that we have made substantial progress raising our target range for the federal funds rate by 3.75 percentage points since March. As our last post-meeting statement indicates, we anticipate that ongoing increases will be appropriate. So they're still going to raise the federal funds rate. They just said it. We anticipate that ongoing increases will be appropriate. It seems to me likely that the ultimate level of rates will need to be somewhat higher than thought at the time of the September meeting and summary of economic projections. Now, that part's important. Let me read it one more time. It seems to me likely that the ultimate level of rates will need to be somewhat higher than thought at the time of the September meeting and summary of economic projections. Now, this is where I blow your mind. Again, everything that's bullish is short term, but long term, they said right here, it needs to be somewhat higher than thought at the September meeting. Let's go to the September meeting. So if we come over here, this is the September meeting, and we have the federal funds rate right here. Okay, let's look at what they said for 2023. Right now, we're at 3.75 and the market dumped. They're looking to make it even higher than what they're projecting here. Look, the federal funds rate is projected in 2023 to be 4.6. In 2024, 3.9. Right now, it's 3.75. So they're taking the foot off the gas. Maybe they bring it to 3.5, 3.5. But then in 2023, they're going to slam the gas hard. Look, 4.6%. So I want to be very clear with you guys. This is just a short-term swing trade. That is all this is. Do not take it as me talking bullish in any way, shape, or form. These meetings are a big finesse, so I have to break it down slow, Barney style, because even I have to read this 3 or 4 times just to comprehend the verbiage. They make it hard to comprehend on purpose. Let's go over this part here. Last year, the ongoing reopening of the economy boosted real gross domestic product GDP growth to a very strong 5.7%. That was last year because they printed a whole bunch of money. This year, GDP was roughly flat through the first 3 quarters, and indicators point to modest growth this quarter, which seems likely to bring the year in with very modest growth overall. So, very stagnant, modest growth for the GDP. Several factors contributed to this slowing growth, including the waning effects of reopening of the pandemic fiscal support, the global implications of Russia's war against Ukraine, and our policy actions which tightened financial conditions and are affecting economic activity, particularly in interest-sensitive sectors such as housing. I don't know if you guys remember my video from before, but we talked about the housing being the biggest weight of the CPI data. Overall inflation, housing has the biggest weight, and housing shows no signs of slowing down, okay? We can say that the demand growth has slowed, and we expect that this growth will need to remain at a slower pace for a sustained period. Now, they know that housing is not slowing down in any way, shape, or form. So what they try to do is they try to show from different perspectives to make this very, very positive. So as we read the next sentence, despite the tighter policy and slower growth over the past year, we have not seen clear progress on slowing inflation. So they're being blatant. To assess what it will take to get inflation down, it's useful to break core inflation into 3 component categories: core goods inflation, housing services inflation, and inflation in core services other than housing. So if you notice, now they're taking out housing. But if you look at the CPI, housing is the biggest weight in the overall inflation. So again, they are softening it. They're making it look really, really good. Look, they even say it right there. Core goods inflation has moved down from very high levels over the course of 2022, while housing services inflation has risen rapidly. Inflation in core services, excluding housing, has fluctuated but shown no clear trend. But I want to go over specifically housing because, to be honest with you, this is the only one I'm really looking at. Housing services inflation measures the rise in price of all rents and the rise in rent equivalent costs of owner-occupied housing. Unlike goods inflation, housing services inflation has continued to rise and now stands at 7.1%. We talked about this in my last video. I told you this was the most important part over the last 12 months. Housing inflation tends to lag other prices around inflation turning points. However, because of the slow rate at which the stock of rental leases turn over, the market rate of new leases is a timelier indicator of overall housing inflation. We'll go over the next year or so. Measures in 12-month inflation in new leases rose to nearly 20% during the pandemic, but have been falling sharply since about mid-year. Now, basically what they're saying is that leases are hard to calculate because people are typically locked up in a year term. So it's hard to get the numbers exactly because you can't. Some people are just locked into a cheaper rate for their lease because they've been in their lease for a year. And then what happens is when the leases turn over, that's when the price or the increased price of a lease gets reflected, but it's all random. So they try to use different indicators to measure it, but the main most important measure that's used in the CPI is the lease term. So they're looking at future projections, but the inflation will continue to rise until, all of that goes through. It's going to continue to rise. And they say it right here. However, overall housing services inflation has continued to rise as existing leases turn over and jump in price to catch up with higher levels of rents for new leases. This is likely to continue well into next year. Into 2023, tail end of 2023. But as long as new lease inflation keeps falling, we could expect housing service inflation to begin falling sometime next year. Indeed, a decline in this inflation underlines most forecasts of declining inflation. So again, I say this is the most important part that we all need to pay attention to. And it's clearly saying well into 2023. So again, what I'm saying is that this is going to be a short-term pump, and then we're going to come down and the bear market's going to continue well into 2023. So just to be clear with everybody watching this video, the only reason people are slightly bearish is because, in my personal opinion, a false narrative. But false narratives go far. They go far, especially for the next month, and it can increase the price of Bitcoin anywhere from 10 to 40%. I have no idea, but I'm trying to make money off of it. And it's all because of this one statement right here. The time for moderating the pace of rate increases may come as soon as the December meeting. So if you read this entire report, most of it, I would say 70% of it, is basically explaining that inflation's not coming down. They're going to continue to tighten policy, but just because of this one statement, everybody is full on bullish. This is how the market works. People don't even read this or pay attention to it for real. And then influencers just exaggerate it out of oblivion because everybody wants to dollar cost average. Everybody wants to make money, so they exaggerate it as much as they possibly can. And then we get these little spikes, these month spikes, and then everybody gets wrecked because they think it's a full-on bull run. Don't get caught off guard. So let's jump into the $60K to $1 million challenge. If you guys didn't know, I'm trading $60,000 into $1 million and showing everybody my updates to show you that it's possible to make money in any market condition, including the bear market, and also to show that dollar cost averaging is not the best strategy. Dollar cost averaging only really works in the bull market. So basically, in the 4-year cycle, you'll have to wait 2 to 3 years to make any money at all if all you know is dollar cost averaging. Now, to be honest with you, in the bull market, I will dollar cost average like crazy, and that will be my primary strategy. But right now, the answer is to position trade and swing trade. And that looks like shorting the market. So right now, I'm shorting the market. And as you can see, I'm in massive profit on all of my trades. So basically, I'm treating shorting the market like dollar cost averaging. So as you can see, I'm up and I'm only down on one position, which is Binance BNB. Okay. So I will most likely, at the end of this video, I haven't done it yet, will exit all of these in profit. As you can see right here, again, I will exit all of these in profit. So I think right now I'm at 65K. So I increased my portfolio by what? Almost 7 to 10%. And like less than a month, I'm on a good track to making that $1 million, guys, because my goal is to make it by next bull run so I could buy the dip with $1 million. And I also have other capital on the side too that I'm gonna use to buy the dip. But I want to show you right in front of your face that if you started off with, let's say, $1,000 and you 20 extra money to 20K, and then you bought the dip with 20K, you can turn that dip. I think you could 10x it into 250,000. So with $1,000, by 2025, 2026, I'm gonna show you guys with $1,000, if you started, a month ago or now, with that $1,000, you could turn it into a full-on retirement by 2025. A full-on retirement with $1,000. With $1,000, turn it into $250,000, 200,000 to $250,000 and retire. I mean, I'm gonna be updating you guys every single time. So you can see every little detail and get value out of my videos, and hopefully you subscribe for that so I can show you more. But again, all I did was treat the market like dollar cost averaging, but the opposite way. I was short cost averaging. So I continued to short as the market went up. But now I think we're going to go up a little bit higher. I think we're going to go up. So I just want to take profit and not be greedy. My goal here is to continuously win over time. My goal is to keep it simple. So right after this video, I will most likely sell out of all of these positions. I don't know exactly when. I'm not making that decision now. I'm just letting you know what the deal is. I will update everybody in Fundamental Secrets. And then I'm going to long an altcoin that I think has the best potential to go up by higher percentages. So I don't think I'm going to long Bitcoin, but I'm going to look for an altcoin that has lost a lot, that fits narratives and is on KuCoin, and I'm going to long it. And I'm going to do it the same thing. If it goes down, I'm going to dollar cost average long, maybe with 2x leverage, max 3x leverage. I will not go above 3x leverage, and I will continue to push it up. And then once we get to that zone that we talked about before for Bitcoin, remember, when I do this, I look at Bitcoin as an indicator. I don't look at altcoins. So like I told you, I think we're going to have a fight at 20K. So at 20K, when we have that fight, I'm going to take profit again. And then I'm going to reestablish, another narrative, or I'm going to reestablish another strategy around that time. I can't predict the future. So I do predict that right now we're going to move up. So I'm adapting. And again, if you guys appreciate this content, do me a favor, like this video and share it with somebody, as well as make sure you have the post notifications on, because obviously this video is time sensitive because you're literally seeing it in real time. So again, I'm going to sell these. I've already made my decision, and I've thought about it for 24 hours. So I've thought about it pretty deep, and I'm very confident in taking profit right now and getting out of all of these. I'm gonna get out, and these are all short positions, and then I'm gonna long the market, get to a certain level, and then I'll let you know when to short it. If you like the quality of this content, hit like. If you don't, leave some constructive criticism, subscribe for more video updates, and like I always say, if you don't get with it, you will get left behind. Thanks for watching this, guys. I love you. Catch you in the next video.